Good afternoon, Options Trading Signals members. This is J.W. Jones coming at you with your weekend video analysis. Hope everyone had a good week last week. Before I get started with the analysis, I wanted to comment on the issues that we had Thursday and Friday. I wanted to reach out to all of the members and apologize for the service issues that we had. As it turns out, most of the problem we initially suspected was on our side of the server due to some interesting activity that we were seeing. We eradicated those problems with a few minor changes in the site and some security protocol, and the problem didn't go away. And eventually, it was determined that the problem was on the host server side. They made some adjustments, and all of a sudden, our services started working out in an outstanding, just like normal, very smooth, lots of traffic, etc. Not a problem. So we believe we've got the issue resolved. I forwarded everyone an email from Christopher Millian, the owner of the technicaltraders.com, with a more detailed explanation. But we apologize. And every time that this happens, and this is the first time it's happened in at least a year, when these things happen, we adjust our website accordingly and do everything we can to mitigate these issues. What we have done is now we are working on a backup to send content out to members, so that if our servers go down and the site goes down, we can still send out content. So that's what our current project is now. That way this doesn't happen the next time there's some kind of server issue that may not be our fault. We can still get content out to members. So again, we all apologize, and I'm sorry that that the issues that occurred last week took place. As far as me personally, I'm still in the GLD double counter spread. I did not take any other positions because I didn't think it was ethical to be involved in taking trades that members couldn't get involved with. So I have done nothing. Still in the GLD double calendar spread. I know we're showing some losses there, but we should regain quite a bit as long as price cooperates on Monday. The time decay and also the volatility levels were manipulated somewhat by the market makers on Friday. So I expect to see we'll be back to close to break even by Monday or Tuesday at the latest. So I just wanted to follow up there. I also am going to be updating the position scoreboard. I've got our last two trades that we've closed. I haven't updated, so I'm going to get those on there for members to be able to view with the commensurate returns. So we'll get that taken care of here shortly. But as far as what we're looking at now, it's 11:36 Eastern Time on this 11th day of December 2011. Let's go ahead and jump in the charts here on the S&P 500 index daily chart. And what we can see is we've got this pretty large channel. There's two channels. We have the upper channel and this lower channel. And this lower channel so far, the resistance level right in here has held right along with the 200 period moving average. So what may end up happening, we may see some kind of rollover if it can push through these support levels here around 1200 and 1225. I think we get at least a test of this around 1190. If that breaks down, we test the recent lows, and if those break, then we're off to the races to the downside, and the bears are jumping up and down. What may end up happening is we may just consolidate through December inside this little range. It's really hard to say. Thursday we had this giant sell-off, 2% lower. I thought Thursday was the move, the telling move. I really did. At first glance, I was like, this thing, we're going to get a retracement tomorrow, maybe a 50% retracement or 0.618 retracement, and then we're going to, by the close, the sellers are going to step on it into the close, and we'll trade roughly flat on Friday, and then Monday it'll be ugly. Well, I was wrong. Friday was very strong buyers and almost reversed the entire sell-off, and that's a huge reversal off a 2% sell-off. So we remain overbought technically in the short term and intermediate term. We're neutral in the long term. So I mean, for now, I don't really have an edge on where we go. I think this is a news-driven market, one of the worst trading markets I have seen in my entire career, because we have so much price action based on headlines. That one headline comes out that pushes prices significantly higher, and then 15 minutes later it's refuted, and then the market sells off. So the volatility up until Friday had been pretty ugly this week, but Friday volatility collapsed on the strong buyer stepping in, pushing prices higher. So right now we're back we're within striking distance of the 200 period moving average yet again. I wouldn't be shocked to see another test of that level, maybe even a test of this resistance area up here, or maybe we just base and consolidate for a while and then work back into towards the middle of this channel, and then we maybe bounce off of 1220 or 1210 to push higher, and test that resistance right in here. If this level breaks, the 200 period breaks, and then the resistance level breaks, we're going to see 1300, and likely this test this resistance level all the way up here around 1347. That's the reality of where we're at. We're going to have to keep an eye on this, but we're in a giant channel without a doubt, and depending on how you slice it, there's a whole lot of different scenarios that could play out. Right now, I don't have an edge. I'm going to continue to look for some time decay based trades instead of trying to take directional trades here. I think it's pretty dangerous, but we are coming into the December monthly expiration. It's a triple witching, so we've got some futures contracts that are coming off as well. So there will be a little bit of volatility there, but as far as this week is concerned, I think we could see some very interesting price actions, particularly based on what we hear coming out of Europe. But it is important to note that most of the sovereign debt instruments in Europe, particularly the 10-year instruments, all got tighter, which is a bullish sign. That means buyers are picking up their debt, so they all got tighter on Friday, so there was some participation there. The question is whether that was private sector buying or if it was more of their central bank buyers stepping in trying to manipulate prices and keep prices lower. It's hard to say for now, but it was accompanied with credit buying in the sovereign periphery as well as the main parts of Europe. So keep that in mind. As we go forward, we'll be watching the futures later this evening. Take a look at the VIX. We can see is obviously we tested this resistance level right in here, which is offered. This is kind of a support zone, but we had a huge reversal on Friday, big reversal, and we're back down near the 200 period moving average. Not a lot to talk about here other than we're seeing quite a bit of volatility in lots of price action in both directions in short periods of time. So we'll keep that on our screen, on our radar, at least to see if the 200 period moving average gets broken on the VIX. I think we could see a very strong rally play out in the S&P. IWM, the Russell 2000 Index ETF, big reversal on Friday. I mean, this thing on very strong volume. Note that the volume was actually a little bit better than it was on Thursday, but we totally reversed the entire move on Thursday, and part of the move on Wednesday came all the way back up and almost tested overhead resistance here. So IWM may be poised to break out and come up and test this 200 period moving average. It's something we're definitely going to have to watch, and I wouldn't be shocked to see buyers step in on Monday. Let's take a look at EEM, emerging markets. Pretty sizable reversal there. Note that the 20 period is crossing down through the 50 period moving average. That's generally it can be a bearish signal, but if price gets up and goes and we see a rally play out, it'll flatten out the 20 period and cause it to rise. As far as if that does take place, our first resistance level, we start to see buyers really step in here. This level is going to offer short-term resistance right here at around 40.55, 40.60, I guess I should say. But this is going to be your first kind of resistance level that some sellers may be sitting there, some sell orders. But for now, this thing looks poised to push higher. We look like Monday could be a higher open, but we'll just have to see how the market reacts to some of the headlines coming out of Europe. Financials, ugly day on Thursday, just pure ugly, massive reversal, and then we had another reversal as well, but the reversal on XLF a little bit weaker than IWM or EEM or IYT, which we'll get to in a minute. But we did have an inside day. I wouldn't be shocked to see. I mean, anything could happen here, but we notice that we do have resistance. We have some support down here. We also have the 20 period moving average technically below the 50. So that could lead to lower prices. I mean, that's not a precursor, but a lot of times when they cross like that, it's not exactly a positive situation. But XLF right now, we get a breakout over this little high here. I suspect we see this level tested somewhere around the 1365, and maybe even up in here and fill some gaps, 1385 even. But above that, we've got major resistance up in here with the 200 period coming down to that level as well. So the XLF, we're kind of in no man's land right now. It's going to be very, very interesting to see how Monday and Tuesday play out. IYT, transports, huge reversal. Again, here's where we're at. We've kind of got a double top here, at least for now. And in the transport, so here's one high, here's our other high. We'll connect those two. This is a key resistance level. If that level is broken to the upside, we'll take out the 200 period and this level. We're off to the races, but we do have a double top, and we have a strong reversal right at the 20 period moving average, similar to the rest of our underlyings that we monitor. So for now, it looks like if I had to guess, just based on pure chart reading, I would think that we see higher prices on Monday just because we have all these reversals. But the volume was pretty good on EEM, XLF, and IWM, but on IYT, buying volume compared to selling volume was extremely weak on Friday. So it's just something to keep in mind. But I do think we probably edge higher from here. Dollar index, pretty ugly day on Friday. We've got quite a bit of noise in here. We're kind of in this little range between this high and these pivot lows. If for the dollar cycle, it really needs to get up and go here. Otherwise, we could have a left translated cycle, which means that we have extreme weakness at the end of this cycle, which is in the next 10 to 15 days. So the dollar is at a key inflection point, and it really needs to get up and go. Otherwise, it's going to be in a left translated cycle, which is going to be ugly price action where we could see some very, very strong selling step in. So for now, we're still well above these lows, and this is the area to watch. Once that 50 period moving average is taken out on a daily close, it's going to be time to get out of dodge on the dollar. Risk assets are going to be on the rise. So stocks, gold, silver, oil, things of that nature are going to be very strong. Treasuries will be very weak. So that's kind of where we're at with the dollar. Let's take a look at gold. Obviously, we've got our GLD position, and gold's in this giant. I made a typing error. Gold is in this giant triangle or wedge, and on Friday we had price test the lows and bounce, but we're in this giant triangle. I think right here's the level to watch. If we do get a break to the upside, price, there should be some sellers lurking around the 1800 level, and if that level gets taken out, then I think gold can extend even higher, maybe make a run to 1900. On the flip side, there's going to be some buyers right around the 200 period moving average, and there's also some support levels that correspond, quite a bit of support right in that region as well. So here's your two levels on a break, whichever way we break. And the way that this GLD position is designed, if we get a major break, we have the ability to adjust to a triple calendar spread, and I suspect, depending on which way price action were to break, we would set it up either with calls or puts, depending on price action, and that'll widen out our profitability curve and give us an opportunity, more than likely, to salvage the trade for gains. I'm not going to hesitate to take some profits on the GLD position, particularly by the middle of the week if price action cooperates. So we're just going to have to watch and see how this plays out. I think if Europe starts to crack, I think gold does well. But I think as long as this situation persists with all the uncertainties and the headline risk, I think we could see this thing base even more, and we might even stay in this little tight pattern for a little while longer. We'll just have to wait and see. But a couple more days would definitely put some profits in our pockets. Take a look at silver. Silver outperformed gold on Friday. Pretty strong buyers stepping in. Volume not exceptional, about average here recently, but we're still in this little consolidation zone. We've got this consolidation zone, this consolidation zone. If we break out above this level here, this breakdown where this breakdown originally occurred, if we can get up above that level, I think we could see an extension back into this trend, this little channel, excuse me, this upward trending channel. But right now we continue to sit in this little channel and base until we break out. There's not a lot to talk about with silver. Oil prices were higher on Friday after being under pretty strong pressure. They are coming into their cycle lows. I wouldn't be shocked to see a big pullback in oil. Not nearly the reversal we saw in the equity markets. Pretty strong volume. I would note that on Friday, but oil as a whole, we got about a 0.618 retracement of the entire move. I think this thing could continue lower just because of the seasonality. You get at least a test of the 200 period moving average. Wouldn't be shocking. Below that, we'd probably come down and test the 50 period, and below that, we're around 90. Those are your key levels to watch. On the upside, a breakout over 102. We should test the highs. If we can push above 103.50, oil will be off to the races. So that's pretty basic explanation of what's going on with oil. Treasuries on Friday got killed. Big reversals to the downside, which obviously helped our TBT position for those of us that are still in it. I haven't done any covered calls this month simply because the price action's been pretty wild. I want things to settle down a little bit there. But for now, we got a really strong reversal, and we're sitting right at 50 period moving average, coming back down and testing this little breakout out of this bear flag. So that's where we are for now, and we'll just have to keep an eye on things and see if we end up reversing, if we have a reversal of a reversal, or if the reversal plays out and we see lower prices yet again tomorrow, and higher prices for equities and other risk assets. 30-year Treasury, similar story, big sell-off, pretty strong reversal. We're back below this little channel again. So, we're sitting here just kind of basing in this little upward channel. What we're watching for is a break at this level. The 30 years pretty easy to watch or to dictate. A break at this level, we're going to test the recent highs. A breach below this level, we're going to test the lows. It's that simple. We're just sitting right in the middle of that range, and we kind of got this little head and shoulders pattern going on, and that could resort in a sellout that would push all the way down and test these lows. So we do have some bearish signals there. But overall, this market's going to be, I don't even want to make a prediction of where we open tomorrow. It could go either way based on headline risk coming out of Europe. So with that said, I'm going to go ahead and sign off. Again, I want to take this time to apologize to members for the last 2 days of the interruption in service. Thankfully, it really didn't have any major impact on our trades or profitability. I haven't done anything, and I refuse to take on any new risk without members having access to knowing what I was doing. So we basically are unchanged. It's like those 2 days didn't happen. But again, I apologize, and we are working to prevent any situation like that from occurring again. So with that said, I'm going to go ahead and sign off. Hope everyone had a safe and enjoyable weekend. Have a great day today. Enjoy a little NFL football maybe, or get outside and try to stay warm depending on where you're at. But be safe. Have a nice holiday, and I will see you guys Monday morning. We'll be back on schedule with the normal with our normal service. I'm looking forward to getting the ball rolling. I will be in touch. Take care. Let me know if you have any questions. Shoot me an email. Have a good Sunday evening, and I'll talk to you soon.